In the U.S. right now, the backlog is for 18,000 cars. This stock just gained 2% in the last hour of the day. This is Tesla. I'm switching gears here, bro.
Okay, go.
Okay,
in
an area where there are no gears, I'm switching gears here. Okay, like in China, the backlog right now is for 13,000 cars. So Tesla has appreciated the way it has over the last month during all these announcements about
because they have recurring revenue now.
Right.
Because they're changing the business model.
Which is fantastic, but the stock has also gained $300 billion in market cap during this same time period when people are going to be using a different like little connector to charge their electric car.
And pay Tesla for every single time.
No, they're not. You know why? Here's the thing. Mel, if you want a Tesla right now, okay, the wait time is the lowest it's been in like years, okay, and they're offering 3 years of free supercharging. So this is going to be the ultimate commodity. Okay, it's going to be the ultimate commodity. I just don't get, there's like insanity going on here, people. I mean, like, and everyone thinks this is.
There are already 18,000 or more Tesla automobiles backlogged in the U.S. In the last trading hour, the stock increased by just 2%. Let's change gears for a moment, literally, as we are discussing automobiles, and say that the backlog in China is currently at 13,000 vehicles. Over the past month, Tesla's stock has increased dramatically, mostly as a result of multiple announcements showcasing their new recurring income model. While this is a great move, it's also important to note that the market capitalization of the stock has increased by $300 billion over this time. Contrary to popular belief, individuals are not actually purchasing Tesla cars every time they charge their electric cars. The good news is that if you want a Tesla today, the wait period is the shortest it has been in years. Supercharging for 3 years is free. Because of this, the automobile is a fantastic value. But the market is a little insane. Everyone appears to accept this as normal. Have you heard about the incredible spike in Tesla's stock price over the last 10 days? Many of the pessimistic investors are in a panic. We'll go back and look at some of the most outspoken critics, including as Tim and Dan, to see how their positions have changed in response to Tesla's unrelenting expansion. Dan still finds it difficult to accept the stock's extraordinary climb, but Tim, who was previously a devout Tesla skeptic, has changed his mind. We'll then turn our attention to Tesla's energy business, an industry that is now receiving the attention it so richly deserves. We'll analyze Morgan Stanley's most recent energy model, which indicates that Tesla Energy's valuation may surpass that of the automotive sector. With breakthroughs like the Megapack and notable rises in energy storage installations, Tesla Energy is well positioned to upend conventional market assumptions. We'll give you a thorough overview of the market dynamics surrounding Tesla at the moment, as well as the expanding energy industry in this video. This movie includes information for everyone, including seasoned investors, Tesla enthusiasts, and those seeking wellness and health advice. Remember to click the like button, subscribe to Tesla Stock News, and check back often for more interesting posts. Let's get started straight now. A recent CNBC film showcases Tesla's remarkable 10-day stock rise. It's important to note before the video begins that Melissa Lee frequently conveys a lot with her facial expressions. Tim, who had previously forecast Tesla's demise and been a harsh critic of the company, had a profound change of heart. He gained notoriety for shorting Tesla's shares, and his wagers proved to be unsuccessful. Dan Nathan of Risk Reversal Advisors, who appears to have tantrums whenever Tesla's stock rises, has now been brought on by CNBC. Though this is just a speculation, it's likely that Dan's tantrums are a result of his financial losses for shorting Tesla. That's what his extreme reactions imply. Melissa Lee, meantime, has priceless reactions to Dan's pranks. May she be taking pleasure in his misery in secret? Let's investigate. The topic of conversation starts with the thrilling stock run of Tesla. One wonders when the robo-taxis will be available for use on public roads. Tesla's stock fell to about $138 a few months ago, and it is currently trading at $262. Investors were concerned about car deliveries back then, but their worries were misguided. Given the cyclical nature of the automotive sector and the recent disruptions to the supply chain and scarcity of vehicles, market volatility is to be expected. Short-term swings don't concern long-term investors. If you're thrilled with Tesla's recent stock price rise, you're undoubtedly considering robo-taxis and other cutting-edge innovations. But let's go back to the time when Elon Musk embezzled roughly $500 million. This action was misunderstood by some as favoring xAI over Tesla. It was, in fact, a calculated move. It made logical to have the NVIDIA GPUs shipped to xAI until Tesla's facilities were ready to receive them, as the company was not yet ready to employ the GPUs. This choice kept Tesla's balance sheet intact and prevented expensive gear from becoming idle. Tesla had a good plan in place despite the unfavorable spins. The H100 NVIDIA chips are essential for creating a network of robotaxis, but they need a fully functional facility in order to function. Were Dan impartial, he would acknowledge that delaying the delivery was a sensible decision. The market has been extremely unbalanced, with short sellers overinvesting in Tesla and bears being taken by surprise. Recent deliveries from the company have surpassed expectations, and their previously unnoticed battery storage business has experienced a 100% growth. Even while Tesla has quadrupled its quarterly energy deployments before, this increase in energy storage is finally drawing attention. Even with rivals like Rivian and Chinese EV manufacturers in the mix, Tesla has firmly established its dominance. Frequently, short sellers drive the stock lower just for it to rise again, resulting in severe financial hardship. Can anyone confirm or refute the claim that some Tesla short sellers may even be enjoying these financial explosions? Either way, it's evident that wagering against Tesla frequently backfires. The stock is in an overextended period, even though it has room to rise further. Some advise selling now in the hopes that the stock will decline and searching for a better re-entry point later. Nevertheless, this tactic entails paying capital gains taxes and crossing one's fingers that the stock declines sufficiently to justify it. Due to its volatility, Tesla might go any way, but the stakes are quite high because autonomy is coming soon. Should robo-taxis become commonplace, Tesla's value may soar. With so much potential at stake, it might not be a good idea to take the risk of selling now. As more people become aware of Tesla's energy storage business's potential, the story surrounding the company is starting to change. Elon Musk has always held the belief that Tesla Energy has the potential to surpass its automobile sector in size. Wall Street is beginning to realize this, as evidenced by Morgan Stanley's observation of Tesla's energy business's substantial value. Energy demand is rising across generations due to generative AI, and interest has grown as a result of Tesla's Q2 energy storage beat. Furthermore, the fact that Tesla's megafactory in Lathrop, California can produce 10,000 megapacks a year demonstrates the extent to which the company is ready to operate. The enormous profitability of the energy industry is demonstrated by the startling comparison that shows the profit made by a fully operational megafactory to that of selling 1 million Tesla vehicles. Tesla's story is changing as Wall Street starts to take these issues into account. Tesla is becoming acknowledged as a significant participant in the energy market and is no longer just a car maker. It has the ability to upend established energy industries. The company is well positioned to benefit from the growing demand for energy solutions around the world thanks to its innovative approach, large size, and strategic focus on energy storage. This interest in Tesla's energy sector is similar to what robo-taxis may someday bring about. Significant financial gains could result from a quicker and more extensive rollout of Tesla's driverless cars. As a result of a fresh perspective on Tesla's potential, Morgan Stanley has revised upward its energy expectations while decreasing its automobile estimates. It's crucial to understand that analysts refer to new car sales rather than the total number of vehicles on the road when they discuss market penetration. According to a notion, Morgan Stanley may be lowering its energy projections in order to prevent establishing an unattainable pricing goal for Tesla. To prevent mockery, they might be attempting to balance their estimations. Nevertheless, because to notable quarterly results and advances in AI, investor interest in Tesla's energy sector has increased. Analysts have revised their Tesla energy model after conducting a thorough analysis of the company's operations, but they haven't altered their $310 price objective. When these analysts handily offset their lower projections of EV adoption for 2030 with revised energy estimates and arrive at the exact same price target to the cent, it is difficult to take them seriously. There is doubt over their methodology because it seems they have modified their car projections to account for the growth in the energy sector. Tesla's energy division is now valued at $50 per share, as opposed to $36 earlier. Rising China protectionism and the comeback of hybrid vehicles are blamed for the U.S. battery electric vehicle penetration rate, which fell from 25% to 20%. As a result, their fundamental valuation has decreased by $15 per share to 5.7 million Tesla auto sales in 2030 from their original estimate of 6 million. A decrease in solar deployments, but an increase in storage has been observed by Tesla Energy, which is largely a pure energy storage company. Currently making up 95% of Tesla's energy sales, the energy storage segment is predicted to grow to 97% in the future. Elon Musk has stated that Tesla Energy is their highest margin company, and this section has a far higher margin profile than the automobile business. In comparison, the price of a single Megapack 2 XL is $1.4 million, which is the same as the money made from selling 35 Tesla vehicles, but at a far larger profit margin. According to Morgan Stanley, the earnings from selling 1 million Teslas is equal to the profit from one fully operational megafactory in Lathrop, California, which can produce 10,000 megapacks annually. Investors are starting to think that Tesla Energy might be worth more than Tesla's automobile segment as a result of this change in viewpoint. The clean tech analyst at Morgan Stanley claims that Tesla's rising brand loyalty, innovation, and size present a serious challenge to the market's established participants. Tesla has also recently turned its attention back to the energy sector. When comparing Megapack sales to car sales, energy storage is 3 times more profitable because a Megapack's operating margin is roughly 20% higher than a vehicle's, which is around 7%. A 3-year earlier prediction that Tesla Energy will achieve 100 GWh in storage deployments by 2028 is one of the modifications to the energy valuation of the company. Another is an increase in the 2025 storage deployment forecast to about 40 GWh from 25 GWh. This change is a result of Tesla's dominant market position and the growing need for energy storage on a worldwide scale. It is anticipated that Tesla would hold a 30% market share in stationary storage worldwide by 2030. With the value of the energy sector rising to $183 billion from $131 billion. It's interesting to note that Morgan Stanley's energy storage deployment forecast for Tesla, which was published earlier than today, indicates a large increase, roughly 50% higher than their 2030 estimates. According to one update, it appears likely that similar hikes for Tesla's projected vehicle deliveries will happen shortly. Even though Elon Musk's high-minded projections frequently cause analysts to reassess their estimates, Tesla is still expected to create and sell 20 million cars by 2030. Bears are reeling from the recent spike in Tesla's shares. After Tim, a longtime opponent, had a change of heart, Dan was left to deal with the consequences of shorting Tesla. It's taking a while for the company's remarkable progress in battery storage to receive the recognition it deserves. With much attention and investment in this industry, it is becoming increasingly clear that Tesla Energy has the potential to outperform the automobile segment in terms of value. With Wall Street catching up to Tesla's vision, the company's future appears increasingly bright. How do you feel about the most recent spike in Tesla's stock? Do you think the value of Tesla Energy may eclipse that of the car division? Have you used AG1? If so, how was the experience? Tell us in the comments section below. For more updates on Tesla and other insights, please like and subscribe to Tesla Stock News if you liked this video. We appreciate your time and hope to see you in our upcoming videos.